Yeah, so I just want to spend some time talking about multiple time frame analysis. As you can see here, we have a 60, a 15, and a 3 minute. So I like to start with the really big time frame over here on the left. It's kind of like reading a book in my perspective. So we start from left to right, look at our areas of support and resistance in the big picture, and then work our way down to actually find a good entry that respects support and resistance. So as we look here, we can see that we're moving from a demand zone up to a supply zone. So our overall trend direction is to the upside. Then once you have that established, then you can look into the short term and figure out what you're doing there. The other thing that you might want to do is maybe even flip over to a daily chart or something like that just to see what you have going on, and then continue to work on. And a lot of times what I like to do is if you do flip up to a daily or a higher time frame, it is to simply go in here and draw in your levels by just drawing a normal rectangle around your zones as you see them, and these are globally drawn objects. So if you look down here now on your 15-minute chart, you will actually see where those areas are, right down there. So that's the wonderful thing about having globally drawn objects in NinjaTrader. We can do stuff like that all the time, as well as with trend lines and things like that. So looking at the medium-sized time frame, I guess you could say, we see a couple different areas here that we'll be hitting. So we have this big drop, and then kind of a basing period, and then it continues to drop off some more. As you can see, we've received our first retest here. Prices started to drop out of there. It looks like it's going to be hitting our trend line, so we are still thinking that we are moving up though in this particular market, because we are moving from our demand area up to our supply area in our bigger time frame. So let's just continue on with that assumption. Then let's go and work our way onto a 3 minute for possible entries. Reason why we're going down in time frames is obviously to manage our risk. So real simple. As far as managing our risk goes, we're just looking to take the low risk, high reward trade. So if we really are on an uptrend, we should see something like this happen, and then it should come back, give us a nice little retest. A lot of times this retest will be where a moving average is, or obviously a zone will be forming there. But if we look a little bit to the left, we should see some previous swing highs or swing lows. That can actually, we should see swing highs here in this case that will be able to give us some support, because we know support and resistance flip-flops quite often. So this was resistance before, now it flip-flops over to support, and look for that to happen quite a bit. Again, you can kind of see, as this trend isn't very strong, I should say, it comes back and does a nice little retest to in where this top area was before. So a lot of times that will happen. If you have a really strong trend move, you might not get a retest like this. It may be more so just retesting a previous couple little basing period candles, like a few red candles amongst the green candles here, and that would be the retest, and then it would continue to go up and make a new higher high, and actually go past the previous highs. So that's what we're looking for on an uptrend. All of our demand zones should be holding and be respected, and all of our supply zones should be broken until you hit up to where the trend is actually ending, which should be something like a retest in a zone that gets respected very well. And that's the basic principle of trading with trend following trades.